Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 20th of June. It's been an extremely bruising week for markets. It's all around interest rates, inflation, and what the outcome of this is going to be. We saw a slightly higher than expected raising of interest rates from the Federal Reserve in the States. Meanwhile, of course, the UK also ups rates. And there was a surprise increase also for the first time in 15 years from the Swiss National Bank. The concern, of course, now is that in its attempts to curb inflation, central banks will actually be tipping some of these countries into recession on the basis that the economic growth that those countries are seeing is not sufficient to withstand the pressures. So, as a general rule of thumb, investors have been heading for the exits. In the year to date, the Dow Jones is now down by 17.6%. In fact, if you factor in a recent high that it hit in January during the day, that's nearer to 19%. So it's very much on the cusp of bear market territory. Well into bear market territory is the S&P 500, down by 23% in the year to date, and the Nasdaq down by 32%. Even the FTSE 100, which up until now has been carrying the torch for many of its global peers, has also succumbed to the deteriorating sentiment. FTSE 100 now down by 3.8% in the year to date. Turning to next week, it's a fairly quiet week on the corporate calendar. It's going to be a couple of weeks yet until we get into the second quarter half-year reporting season. In the meantime, next week, probably just two companies to look out for. The first one being Associated British Foods, whose shares are down by 31% over the last year. Of course, the main focus for AB Foods is going to be the performance of Primark, which in normal times would account for around half of the overall group's revenues. Clearly, as we've seen this week with updates from the likes of ASOS and Boohoo, the retailing sector is in a very difficult space at the moment. We've got inflationary pressures, the cost of living crisis, and of course deteriorating consumer sentiment. So it'll be interesting to see how Primark is weathering that particular storm at the moment. In the absence of a really proper online presence, we'll also be looking out to see whether the trend towards retail parks and away from city centres has continued, and in the case of Primark, of course, how its foray into the United States is currently faring. There's also going to be full-year numbers from Berkeley Group, the FTSE 100 house builder. Shares down about 22%. Over the last year. There's a bit of a disconnect here between how house builders are actually faring in terms of trading and the share price performance, which clearly isn't keeping up. And again, that's against that rising backdrop of interest rates, but also declining consumer sentiment. So normal things to look out for Berkeley Group: sales reservations, average house price that they're receiving, and equally importantly perhaps their outlook. Finally, in terms of the fact that it's full-year numbers, we should hear something around the dividend, which last year, including specials, led to a fairly punchy yield. So it'll be interesting to see whether Berkeley maintains that dividend stance. Thank you for watching. Have a great week.